Please welcome to the stage founder and managing director of RevTech Labs, Dan Roselli.
That's great. Well, welcome everybody. This is one of my favorite parts of Fintech and Insurtech generations every year, the demo day for our graduating class. A little funny story if you didn't know it. 10 years ago when we started RevTech Labs, we struggled to get people to come to a demo day of 8 or 9 young companies. And so we did a thought leadership day around Fintech. Really cool people in the room, good conversation, and we just kind of Trojan horse the demo day into that. And once we had the right folks. And it worked really, really well. And that is how Fintech and Insurtech generations actually started, was a way of amping up the demo day for the class. And now, of course, it's turned into something much bigger and better, but still provides a wonderful platform for our demo day and graduation and the Class 16 founders that you're just about to see. Before we bring them up on stage, I just wanted to spend a second to do a big thank you to the RevTech Labs team. You can see everyone here on the slide. They do a fantastic job of working with the Accelerator and the companies, working with the production team and putting all of this on and making stuff that is very, very hard look easy. And lots of times I get up on stage and talk to you all, but I assure you, they're the ones that make this all happen. Can we give them a huge round of applause, please? So just one slide on the RevTech Labs Foundation. If you've heard us talk about this, we made a change that the Accelerator is actually moving, hasn't done it yet, but it's almost there, to the 501c3 RevTech Labs Foundation we set up. So it's now an asset of the community that we all collectively own. And we think that's a really good move and will allow RevTech Labs to hopefully be here at Class 32 someday. But everything we do is around the center of value creation for entrepreneurs, identifying them around the world, vetting them, helping fund them and develop them. So it's really, the entrepreneur at the heart of what we do. Different focuses in health tech, acceleration, and then also growth stage, the work that we do at the Venture Conference and through our international landing pad program, and then the major conferences that we put on and that we produce. So that is the organization that helps bring all of this to life, and I think that's good for you all to know. What I want to do now is introduce and bring on the stage the real hero of the Accelerator, someone on our RevTech Labs team, Jasmine Boyce, who is the program manager and makes all this happen. Please, huge round of applause for Jasmine Boyce.
Hello, everyone. I'm Jasmine. Is this working? Okay, perfect. Good morning, everyone. I'm Jasmine Boyce, Program Manager of RevTech Labs. So I really had the true pleasure of working one-on-one with the founders throughout the program. So before we dive into the founders' presentations, I'm going to take you guys back all the way to the recruitment process of Class 16. So for recruitment, we reached out to over 3,800 companies. We interviewed and screened 56 of them, and then 39 of them made it to the semifinal interviews. A few statistics I'd like to share with you all. 13% of our founders were veteran founders. We had 42% female founders, and then we had 63% of the founders of founders of color. So as you can see on the screen, this is just a map of where we were seeing all of our companies applying from. So some of the biggest hubs that we have are the US and Canada, as well as Europe. And we are also starting to see quite a few startups starting to apply from Africa as well. Here is a pie chart of all of the verticals that we saw come in through the pipeline. So as you can see, we have a variety of different verticals that applied for Class 16, but the most popular verticals that we had apply were blockchain and insurance. And to finally complete the applicant statistics for Class 16, so on average, the companies that applied had over $352,330 capital raised. The median capital raised was $60,000. 55% of our applicants were revenue positive, and then 36 $36,500 was the average monthly revenue of the application, or of the applicants. So these are our final 9 companies that made it through the recruitment process. So we have Profit, we have Spin, Analytics, Capturisk, Komodo, FundsaiQ, Jautin, Digitech, White Swan, and Wingdriver. And as I mentioned at the beginning, it's been a true honor to be able to work with each of these founders throughout the program. I don't know if most of you know this, but I am I'm finishing up my last week at RevTech Labs, so this is my 3rd and final cohort, and I'm just really, really grateful to be able to have had such a phenomenal cohort. So before we get into demo day, there's a few other things that I want to share with you all. So we do have a few applications open. So our Class 17 Accelerator program is currently open, and the applications are going to be closing June 22nd. So if you yourself are an entrepreneur with a Fintech or an Insurtech startup and you are interested in applying for the Accelerator program, please visit our website where you will have more information about the program as well as the application. Another application that we have open is the Venture 135. So our Venture 135 is our venture conference that we host for our fall cohorts. So if you are a Fintech, Insurtech, health tech, or clean tech startup from anywhere around the world, it could be from seed stage to anywhere to Series B. If you are interested in applying to pitch at Venture 135, please visit our website as well for more information. Just to let you all know, there is no cost to apply, and there's no cost to present at the conference as well. All right, and then we have a startup referral reward as well. So if you are somebody that works with a bunch of different Fintech entrepreneurs, we are having this reward to you all that refer the startup to apply to Class 17. If they submit their application, you will have 3 free massages from Zen Massage. So if you enjoy massages like myself and you are interested in this reward, just call up your local or your startup and have them apply to our Accelerator program. Also, if you have any other questions or you do just want to refer them directly to our program, this is Ashley Everett, our program director. That is her email, so feel free to capture that and reach out to her if you have any more questions. All right, and I would like to quickly thank all of our program sponsors. So here all of they are, and this program would not have been possible without you guys, so thank you so much for supporting our founders and our Fintech Accelerator as well. All right, and I think this is the time we've all been waiting for. So we are going to be starting with demo day. And the first person I would like to call to stage to introduce our first company is Doug Neal. So Doug Neal is the managing director at Neal Capital. So feel free to join me on stage.
All right, I'm making a second surprise appearance because I forgot to talk about something really, really important. So before Doug does his introduction, one of the most fun traditions we have at RevTech Labs, being an entrepreneur is really hard. So those of you in the audience who have done this, right? Getting up on stage and pitching your company is like, you know, showing pictures of your baby for people to call ugly, right? It's really hard to do. And so what we do, and it's a great tradition, when Doug gets done and when every introducer gets done, they're going to say, and if you could, as our tradition, stand and give a standing ovation to the founder, not as they leave, give a standing ovation to the founder as they come on the stage in recognition of how hard it is and how much we appreciate them putting themselves out there and just raising the energy in the room. So really important tradition that I forgot to do, so thank you for letting me step in for a second, sir, and do that.
My pleasure. Good morning, everybody. My name is Doug Neal, and it's my pleasure to introduce Shyam Gopalswamy. And Shyam is the CEO of Capturisk. So Shyam is a very experienced financial risk manager, and he worked for a bank a couple blocks up the street, won't say which one. But when he was there, he discovered that a lot of the secured loans that the bank was underwriting really didn't look at the credit of that loan. They requested very expensive appraisals, for example, even though that borrower may have had sufficient capacity to repay that loan regardless of the value of the collateral. So Sham was very intuitive about this and thought, well, there's got to be a better way. This is very expensive, it takes a lot of time, borrower is frustrated, the underwriter can't do their job, so he developed Capturisk. So Capturisk is a platform, online platform, that captures or allows underwriters to accelerate decisions on real estate commercial lending loans by providing just the right data in just the right format. So now it is my pleasure to introduce Sham. Please give him a standing ovation.
Pumped up, thank you. Thank you you all can hear me clearly because even I can hear myself. Good morning, I'm Sham Gopalswamy, I'm with Capturisk. As the name suggests, it's capturing risk, and like Doug mentioned, we want to accelerate the process, and we want to help community banks, any type of bank that deals with commercial real estate loans under $10 million so they can accelerate the process, help their borrowers get that loan, because the borrower is not requesting a loan. The purpose is to see the borrower succeed. The borrower wants to start a business. Why make him wait 3 months when he can get the loan done in a month or less than that? So with that, let's move on. Where's the process right now? Why is it broken? You ask anybody involved in the process, they'll tell you it is extremely siloed. So many people involved, so many softwares involved, they don't talk to each other. And most importantly, the borrower does not know the progress. They're just not aware as to where the loan is. How long is it going to take? On an average, it takes 2 to 6 months in any size loan at any bank. Extremely manually intensive. Even at the bank that I used to work for, which is literally 4 blocks from here, a husband and wife doctor family, extremely good credit, simple property, $350,000, bang in the middle of the city, lots of comparables right around the corner. Yet the whole process took about 2.5 months. That should have been done in less than a month. I call that a no-brainer loan. Why is it taking so much time? Well, even though with so much of sophistication and technology, why does it take 2 to 6 months? Appraisals. As you can see from the chart, it's an aging, dying industry that is extremely biased, gender biased, racially biased, and innovation biased too, to an extent. So what do we do about it? Are we going to let $1.6 trillion of loans captive to this industry? Or are we going to just boldly stand up and say, question the status quo? Why does it take it so long? Why can we not automate it? We're not trying to replace humans, but let's try to modernize them. That is what we are doing, a two-pronged solution. One, an integrated workflow. Think of this as a simplified sales force, so everybody's involved, not just the loan team, the credit team, the appraisal team, and the borrowers. Imagine that. We're actually being transparent to the borrowers. Wow. Not just that, not just the workflow, because that'll only solve the transparency issue. How are you going to tackle the efficiency issue? Technology and data mining. You ask anybody in the industry how much time an appraiser spends just grabbing data, almost 3/4 of the time. Why bother? Let the machine do a machine's job. Let the human do the expert's job. That is exactly what our product does. Our API goes and grabs all the data that is needed, cleans it, and puts it in the right spot, and then automates the entire underwriting process up to a point where the appraiser or the credit officer finalizes the whole process. Again, like I said, we are making sure we keep the human in the loop. Only thing is, we're automating 60 to 70% of what they're normally doing. This will cut down time. Just look at the archaic process, how complex it is right now. Now, how many players are there in the market? Despite the fact that there are so many people that you can see who I call indirect competitors, the problem is still not solved. Go talk to your loan team. Ask them how their borrowers feel about their process. I'll buy you lunch if they come and say that they're happy. Our process tackles both, not just the appraisal problem, but also the entire credit underwriting problem. Integrated workflow and data models to help you accelerate your underwriting process. We do have some traction. We were fortunate to be a part of a bank, a couple of banks, and here's what they said. They helped us build the product along the way. Finally, the C-suites can see what the loan team is doing and what their appraisal team is doing and how their borrowers are feeling all in one platform. Another CEO said, well, I asked for a camera and I got a Cadillac. Why do you need it? You don't need a Cadillac. You don't need the big, clunky software. It's just something simple, usable. This is an interesting thing I heard from another CRO. Why do you want to spend 200 hours and try to figure out that the loan is a bad loan? You should have known about it much earlier in the process. And more importantly, why waste 200 hours? If it's a no-brainer loan, that also should have been done earlier so that you can start collecting 2 months early in terms of interest income. The business owner is starting his business 2 months earlier, so they can start collecting their business income. The purpose, we talked about purpose yesterday. The purpose of our software is to see you succeed and your customers succeed. How big is the market? It's about $6 billion just in terms of operating costs that run about $400 to $500 billion of loans that get originated every year. Now, our goal is to capture at least 2% of that. We want to make revenue around $130 million in about 3 years. It's a simple software as a solution service provider, subscription-based. But if there are lenders who do not have that much loan volume, we can even do transaction-based. This is our strength, our team. As you can see, that is me, pretty much 20 years in finance and asset management and risk. And George, he's the appraiser and also a data scientist. Very unique, very hard to find that combination. And VG, she's my CTO. Obviously, she's coming with a huge amount of experience from the banking industry and runs the entire technology show. Most importantly, we have Dan and his team helping us, and his whole advisory suite has been helping us phenomenally in the last 6 months. Our ask, capital, definitely, because we are at a very, very critical point. The second year of any startup is the most complex, is the most crucial. It's a live or die situation, right? So, but we are there. We are on a die-hard mission to get it done. More importantly, we need better clients. Our product is ready. We built 60% of it, of our product roadmap. But we need you to come and co-build it with us, because we don't want to build the way we want it. We want to build it the way you want it. Again, the purpose to see you succeed and your borrowers succeed. Commercial real estate lending, guys, it's a huge market, untapped market. Let us come and help you. Use us as your extended fintech arm, your technology partners, and we'll make sure you succeed. That is it. Thank you so much.
Thank you. Absolutely. All right. So our second company actually could not be here. It is Digitech. Founder is Alex. So Digitech is an international startup that specializes in the development, integration, and commercialization of professional solutions and value-added consumer services, exploiting new information and communication technologies. So if we can please play his virtual presentation.
My name is Alex Swan, and I'm the founder and CEO of Digitech. Our cloud-based reinsurance platform is being used by 200 reinsurance/insurance companies. And in the 15 countries where we operate, we process over 40 million policies worth 200 million gross written premiums. What is the link between that and the Lloyd's? Well, early this year, the largest reinsurance marketplace in the world have just announced a multi-million pounds move into the cloud to digitize a century organization and saving dozens of millions in the process. We want to build a sustainable reinsurance business in the same way Warren Buffett has done some 30 or 40 years ago, yet it's 5 or 6 times faster by being the largest digital reinsurance broker in Africa and emerging markets. Indeed, the current problem to solve is huge. 99% of the reinsured policies in Africa which are processed are exposed to huge operational risk and losses because of manual entry through Excel and email. And this trickles down into issues such as issues to track in real time the transactions, issues to know that when they exceed the capacity to pay claims, or silly mistakes in billing due to inaccurate pieces of information. Our answer to solve this is called Hyperion. Hyperion is an intelligent and automated reinsurance cloud-based platform which is currently processing millions of reinsurance policies per month, from premium subscription to claims handling, including billing and regulatory compliance. Hyperion has been genetically engineered to address the lingering issues faced by third-party reinsurers and insurers. If Hyperion has been built to operate in a resilient way in the whole of Africa and beyond, the reason lies in the fact that we need to tackle a niche in the second fastest growing insurance market in the world, which is probably going to reach or exceed 100 billion by 2030. Yet, in Africa, 99% of those companies spend between 12 to 20% of their revenues in admin expenses. This is way above the other global counterparts, and is one of the reasons why Hyperion exists, as it can cut through this inefficiency almost from day one. If globally 10 billion could be saved through the usage of digital technologies, RBPA, machine learning, and blockchain, according to PwC in the survey in 2020, in Africa, a consortium of African largest reinsurers estimate that we have a 2 billion TAM, which trickles down and translates into a final 100 million US dollars SOM per year. And if we look at the current traction, maybe we're doing one of the things right. 200 companies spanning 15 countries in West and Central Africa are currently using Hyperion on a daily basis. And to date, Hyperion has collected 200 million gross written premiums, which represent over 40 million policies and transactions. This early traction is reminding us that competition is also part of the equation. If in Africa we benefit from the first mover advantage, reinforced by network effect, the story is different on the global scale. Yet, we consistently score better than either traditional reinsurance software companies, incumbent reinsurers, or else on key features such as time to market, policy process automation, or AI actual tools. This traction could be explained by a three-tier revenue model. A stage one onboarding and maintenance fees have got us off the ground. What is going to ensure a faster sustainable growth is stage two policy processing fee. For example, with 1 million policies processed per month, we can generate 100,000 US dollars per month. Yet the ice of the cake could be stage three instant payments clearance house for a consortium-based blockchain. At 0.5% fee, which represents 20% of what company currently incur, meaning a saving of 80% for the normal banking transactions, we could yield 45 million US dollars per year if we capture less than 50% of the reinsurance transactions by 2030. Since we started, we've averaged 200,000 US dollars AAR. The current funding is going to help us reach or exceed 1 million US dollars AAR. Indeed, as mentioned in the previous slide, what is really going to catapult us in the waters of 10 to 20 million US dollars is the instant payments clearance house. As you can see, we've averaged historically 80% gross margin and do not see a reason of change in the foreseeable future. The team behind those numbers brings a combined experience of 60 years in relevant field of insurance relations, technology, actual science, and etc. Experience gathered in various continents. Myself, I claim multiple degrees, including an MBA summa cum laude from Holt and a supply chain engineering degree from the Regional Polytechnic Institute in Côte d'Ivoire. I also did in various certificates, including one in blockchain from the MIT. And I'm surrounded by multiple PhDs, including our CTO and our chief actuary. We're supported by a strong board with decorated captains of industries in the respective fields, which cover Insurtech, VC funding, business development, technology, and private equity. They bring insight and unique support through their network. And all of this lead us to a great investment opportunity that can turn us into the next Insurtech behemoth of Africa as the largest digital reinsurance/insurance broker. We are currently raising 1.5 million US dollars with 500,000 already secured in the bank account to reach 1 million AAR per year. The money will be used to increase the functional and operational capacities of Hyperion to recruit more gifted talents and improve our marketing and branding campaign. This will be a key milestone toward achieving our targeted exit of 500 millions by 2027, meaning 100x from now. My name is Alexandre, and I'm the founder and CEO of Digitech. Thank you.
All right, so moving right along into our next presentation. The next person that I would like you all to help me welcome to the stage is Nikita Norman, the Vice President of LPO. So Nikita, will you join me?
All right, imagine this. You are a portfolio manager with a team of analysts all trying to select the best mutual funds with the most consistent level of return. Do you turn to Morningstar? Perhaps initially, but you need a tool that delivers true alpha and takes it a step beyond what Morningstar can deliver. Because let's face it, no one uses that platform alone. They are using multiple platforms in addition to human capital. Because in today's markets, with recessionary pressures all around, clients need to know that you can deliver. Now, can you see it? Enter FundsaiQ, a revolutionary machine learning platform that streamlines your portfolio and screening process, saving you time and money. Oh, and you know all this controversy that's surrounding ESG? FundsaiQ doesn't define it for you. They empower you to define it. With the power of customization, the software lets you decide what you don't want the funds to hold. Then it selects the winners. Alpha delivered. Ladies and gentlemen, let's give a standing ovation to Tom O'Connor with FundsaiQ.
Good morning. Well, thank you very much to Nikita for that very generous introduction. The reality of the situation is the mutual fund industry needs help, and FundsaiQ was envisioned and designed and built to provide that help. Mutual fund industry is huge. 60 trillion has been invested. It's grown and double in size in the last 20 years, and the number of global mutual funds is now in excess of 125,000. So just in this room, 40% of you will probably hold mutual funds in your portfolios. So it's absolutely relevant to so many people. Unfortunately, the reality of the situation is 98% of active fund managers over any benchmark you would like to measure them will fail to beat the best passive funds. But the good news is there are some rock stars out there. We help find the rock stars. So whether you are an analyst at a Bank of America, whether you are an independent advisor managing money for a family office or endowment, or whether you're a fund advisor supporting an individual with their retirement fund, FundsaiQ can help you. As Nikita alluded to, 90% of the industry is still working in the same way as it did 10 years ago. It's taking information from a number of different sources, throwing it all together, pushing it into Excel, stirring the pot, and trying to get the right answer. It's not efficient, and you do not get the right answer. FundsaiQ is and does. In effect, you are trying to find out who are the best winners for you. We recently ran a test with a prospect in Europe. We took 5 of their analysts and a blind test, and we ran our portfolio through the algorithms and returned the answers. It took them 3 days. It took us 1 hour, and we had a tea break in the middle of that, actually. In the end, the result was that our portfolio suggestions would have outperformed their portfolio suggestions by 65%. This is a solution that is very much next generation. More than a nice dashboard, it is AI-enabled, machine learning powered. It's a big data crunching machine. We have got a lot of intellectual property that we've embedded into it. We decompose information down to atomic components and recompile everything to actually make the recommendations. However, the recommendations that we make is only the first step. The other half of the battle is monitoring and managing the portfolio. We actually alert you proactively to important things, style drift, manager changes, redemptions. All of this is done proactively and seamlessly for you. ESG in Europe is a big issue. We have spent a lot of time talking to our prospective clients and embedding some strong ESG capabilities. As Nikita alluded to, it's an overlay. People can input or exclude whatever they want to do. But from our perspective, this is absolutely a growing trend and something that is not going to go away. We have not seen anything else in the market that actually compares to what we're doing. We have done a lot of work in the last 2 years. I mean, we only founded in Q1 2019. There's been a lot of, all the heavy development lifting has been done at the back end. We've released our first product into the market at the beginning of this year. It's being tested now by half a dozen clients. We expect to see some commercialization in the coming weeks. We're now at the point where we want to push out into the US and Asia. We see both of these markets as significant for us as an organization. We've got the product for it. We really just need to execute against that. To help us do that, we are looking to raise some additional capital, really just to complete the back-end development for the specific markets we want to enter, as well as to build out some of the commercial functions that we needed to actually bring the message to the industry. We're also interested in developing relationships with strategic partners in these regions. So anybody who wishes to have that conversation, we're very much open to that. The net result is we really want to help the industry find and monitor the best winners. We want people to be 100%. And that's my message. Thank you very much.
Thank you, FundsaiQ, for that presentation. Next up, I would like to welcome Andrew Hicks from the RTL Capital team to stage to introduce our next presenter. So,
ladies and gentlemen, please welcome.
So, like Jasmine said, my name's Andrew Hicks. I'm a principal on the venture fund side of things at RTL. So, not only do I have the privilege of being a mentor to a lot of these companies, I am an investor as well. And so, while a lot of these mentors and advisors claim they're rooting for you guys, I'm really rooting for you guys to succeed. So, but all joking aside, as a former founder, I feel like I have a good eye for spotting talent. And that's what makes me super excited about what Jautin is doing. The team that they put together is fantastic, and they truly get it. So when you combine that with one of the hottest markets right now in embedded insurance, really cool and exciting things happen. So it's my pleasure to welcome up the founder and CEO of Jautin. So let's give him a standing ovation. Rain.
All right, thanks for having me, everyone. Rain Takahashi, founder of Jautin. We enable embedded insurance as an add-on. We're based in Toronto, Ontario, Canada, which means I'm obviously friends with Drake. Thanks for laughing. That slide took me like 2 hours to make, so I really appreciate it. I'm probably going to get sued too, so worth it. But unfortunately, we're here to talk about embedded insurance. Embedded insurance is insurance that's sold alongside a third-party product, service, or process. And I assure you, you've already experienced this yourselves. Every time you go to buy a flight ticket, you always get offered insurance as part of the sales process or purchase process. And so this is a perfect example of embedded insurance. So at Jautin, we don't play in the travel space. However, we enable insurers to digitize and embed insurance, reducing insurance distribution costs by over 90%. For the investors in the room, we have scaling MRR, we have initial product market fit, and first mover advantage, which I will get into more shortly. However, let's take a step back. What is the problem we're trying to solve? Well, low premium insurance products are the thorn in the side of insurance companies. They're very hard to sell and distribute profitably. Why? Because brokers and agents don't prioritize low premium products. They're paid on commission. Why would they prioritize a $100 policy? Direct to consumer is very expensive. For example, the average cost per click on Google is $55. That's cost per click, not cost per acquisition, cost per click. So what ends up happening is billions of dollars are lost every year in margins and revenue opportunities because of this inefficient distribution process. So that's where embedded insurance comes in. Embedded insurance allows insurers to piggyback off of third-party products and processes, as mentioned, reducing distribution costs by over 90%, effectively eliminates the need to market a product because once it's embedded, the third party does the work for you, resulting in 3 to 5 times additional margins from the exact same product the insurers are already selling. So the big question we asked ourselves at Jautin is, it's a proven model, where can we do this? And just like any great startup, we had to start somewhere. So we started in special event insurance. Special event insurance, what is that? That's insurance that you take out on, say, your wedding day, or a birthday party, or whenever you're borrowing a third party's property, like this event, to host a group. And what we did was we embedded the insurance into the rental process of the venue. So imagine you're going to the church to sign your agreement to get married there, and they say, you have to bring your own insurance. And you're like, oh, shoot, what do I do? And they say, well, it's just click this button and you're done. So what previously took 3-4 weeks of chasing after each other is now down to 3 minutes or less, depending on the integration. We do the full quote bind and issue on our system, meaning we do not rely on any third parties to process the policies. We do that on our tech. We have no code, low code, and full API embedding options, meaning we can embed into any tech stack. And even if they don't have a tech stack, we can embed with them. As I hinted at, this is already live. We went live March 2021, only did $3,000 in premium that month. However, we've grown every month since then, with 2022 estimated to bring in $2 million in premium and over 10,000 policies sold, and that's just with event insurance. We're already onboarding over 5,000 venues across the US, and each venue is going to make the insurance mandatory. You can't ignore it. You have to get it if you want to get married at that church or have a birthday party at a movie theater or whatever it might be. Best of all, venues don't charge us anything. We solve a bigger administrative problem for them. They're like, amazing, we want your free tool, and we don't want to cut. You can keep the whole share. You're making our lives easier. Revenue models, pretty straightforward. The setup fee, transaction fee, both charged to the insurance company. And we don't charge our channel partners anything. It's a free tool. Now, you might be asking, what is the serviceable attainable market for something like this? Well, the average premium right now is $200 per policy, real number, based on our sales. We anticipate each venue we partner with to send us just 2 policies a month or 24 a year. That's all we need. At 10,000 venues, $48 million per year in premium, keeping in mind we're already onboarding 5,000. However, we believe the serviceable attainable market is actually 150,000 venues for us in the US, putting us at $720 million per year in premium with one insurance product, liability-only event insurance. We're not a one-trick pony, though. We are already expanding into other areas and events, such as cancellation coverage, A&H, accident health, weather-related coverages. And outside of events, we're already experimenting and piloting with things like snowplow insurance in 19 states. Health benefits, we did a pilot with Grubhub. So we're not a one-trick pony. We're killing it in events, and we're already expanding outside of events as well. So when you add up all these niche areas, without even touching auto or home, which I'm sure you can imagine is massive, we're looking at a $5 billion per year premium opportunity serviceable attainable market. So here's our ask. We want more venues. We are looking for introductions into venues, specifically groups of venues. So municipalities, universities, hotel chains. Because the more venues we have on our system, our MRR grows. It's a very simple model. For the investors in the room, this is our fundraising timeline. We do have an informal convertible note open right now. It's a long story, but over the next 3 quarters, we are going to expand and grow our MRR, putting us in a great position to close our Series A in Q2 of 2023. So to summarize, at Jautin, we enable insurers to digitize and embed insurance, reducing insurance distribution costs by over 90%. Thanks for having me.
Great job. All right, y'all, we are halfway through our demo day presentation. So the next person I would like to welcome to the stage is Tori Rather, who is the VP of Morgan Stanley. So please help me welcome Tori to the stage.
Hey, good morning. I'm Tori Rather. I've had the last couple of months opportunity to work on the advisory board with the team at Komodo, and having spent the better part of the last 20 years in the asset management space, I've seen all of the focus that has gone into the ESG space. And to this point, all of the attention, I think, has really been more focused on the equity asset class. And I think what Komodo is doing is really focusing a lot of the data and analytics and applying it to the municipal space. And so simply put, their focus is improving the transparency, the access to information in the $4 trillion municipal bond market. And so with that, if you'd help me to introduce Doug and Joel, co-founders of Komodo, to the stage. Oh, just you, Doug Rogers.
All right, thanks a lot, Tori. So as he said, I'm Doug Rogers, the COO of Komodo Analytics. Our mission is to use better data to make municipal bonds more standardized so they're easier to issue, buy, and trade. Now, much like the Komodo dragon, our logo, the municipal bond market is somewhat of a dinosaur. While technology has been used to increase access to capital in other asset classes, the municipal bond market has been left behind. Now, the muni market is roughly half the size of the corporate bond market, but there are nearly 10 times as many issuers and over 1 million bonds outstanding. And despite default rates being 10 times lower in the muni bond market, average fund management fees are 14 times higher. So why do muni bonds, which are a safe asset class, have such high fees? The key problem in this market is the inability to quickly assess and price risk. Pricing municipal bond risk is a time-consuming and highly manual process due to market fragmentation. And there's two key challenges in this space. First is the number and variety of issuers. There are over 25 times more municipal bonds than in the corporate bond space. It's a very diverse group of issuers, different sectors, different levels of sophistication, different frequency, different sizes. Secondly, there's a high amount of unstructured data in this space. Financial reporting is done in non-machine readable PDF files. There's up to 9-month delays in when these documents are actually filed. There's lack of consistency among issuers and what they disclose. So this is a time-consuming process, and it results in either firms focusing on a smaller fraction of the market or hiring costly analysts. So Komodo is creating a platform to automate the municipal bond evaluation process. There's 3 key layers to our solution. So reliable and universal data is needed in order to create automated systems. We find and we clean the data, and we do the hard work of linking it to municipal bond issuers. The data then plugs into our sector-specific models to create quantitative scores. This allows firms to start making rule-based investment decisions. And our web platform displays the scores in the underlying data, and we're building integrations into portfolio manager and credit analyst workflows. Now, several of the largest asset managers, they've used their resources to create these proprietary systems in-house. We are leveling the playing field by providing the rest of the market with access to sophisticated tools and capabilities. Our product has 3 value propositions. So first, we help firms improve their investment decisions. Our customizable models allow firms to take proprietary outlooks in order to outperform the competition. We let firms increase their existing team's capacity without adding full-time employees. And we provide compliance and auditability built in for firms to comply with current and pending regulations. Now, our initial product is focused on ESG risks as our market entry point. ESG is a mega trend across all asset classes, and we've seen a large increase in the municipal space lately. Firms are marketing ESG strategies as a way to attract new clients and to retain these elevated fee levels. With this explosive growth, however, there has been an increase in regulatory scrutiny and requirements. Investment teams are being asked to include this additional analysis on top of their existing workload. They're stretched thin, and they're looking for software solutions to help. ESG represents an ideal beachhead into a huge market opportunity. Each year, asset managers, banks, insurance companies, and investment advisors spend a total of $14 billion managing their municipal bond portfolios. And Deloitte estimates that tech spend for these firms is going to increase at 14% per year. So for our ESG product, we're differentiating ourselves from competitors through our quantitative approach and our customizability that we provide customers. Other firms focus either on individual risk factors or they want to become ESG rating agencies themselves. And I want to highlight the M&A activity in this space, with 3 of the other firms having been acquired in the last 2 years. Our team at Komodo has the capital markets and tech background needed to solve this problem. Joel spent 5 years at S&P Global building financial data products. I spent 12 years at PNC working in banking and debt capital markets. And Kyle is a graduate of Carnegie Mellon's computational engineering program. We've seen exciting early indicators of product market fit. We have our paid pilot with Federated Hermes, and we're working with their team on loading their portfolio and pressure testing our models. We're actively building out our sales pipeline, and we have an estimated $300,000 worth of deals. We have another pilot starting in August, and we're looking for 1 additional pilot that we currently have the capacity to run. And we're very fortunate to work with great early investors and accelerators, including Carnegie Mellon University, InnovationWorks, and RevTech Labs. Our goal for the next 2 months is to finalize and kick off these 2 additional pilot projects. We're then targeting a seed round raise in the later half of the year. So we'd love introductions to seed stage VC firms, specifically ones that focus on enterprise SaaS and Fintech markets, as well as introductions to asset management firms and firms that focus on municipal bonds or have a fixed income focus. So that's it. Thank you very much. We are Komodo. We are building the data analytics platform for municipal bonds. Thank you for your time.
Great job. Moving right along into our next presentation, I would like you all to help me welcome Kate Lasacco, who is the VP of JP Morgan, to the stage so she can introduce our next company.
Ooh, intro music. That's fun. Thank you, Jasmine. So as Jasmine mentioned, I'm Kate Lasacco, Vice President at JP Morgan's Technology and Disruptive Commerce team. I'm sure most of you just heard another bank in Charlotte and rolled your eyes. I get it. But over the last couple of months, I've had the absolute pleasure of getting to know Vin and Franz at Profit, and really just the opportunity to experience how they are empowering small business owners across the United States. So what you're going to learn here today is Profit helps business owners succeed by providing an all-in-one bank account that simplifies accounting to support them in making better financial decisions. For anyone who's met a small business owner, this is desperately in need for them. So please help me welcome to the stage Vin Montes and Franz Romain.
Hey everyone, my name is Vin Montes. I'm co-founder and CEO. I'm a US Air Force veteran. I'm a second-time founder. I'm a software engineer, and I have a master's in computer science.
And I'm Franz Romain, also co-founder and CTO of Profit, also prior software engineer, and I have a bachelor's in computer science. So Vin and I, we met about 3 years ago at UPS. We ended up building a financial spend application for them that saved them about $50 million a year. That project won the Red Hat Global Innovation Award for saving UPS a lot of money. Prior winners for that were Deutsche Bank, Barclays, and BBVA Bank. Vin's also a prior small business owner, had a beverage business that was sold in 2020, and we've got a team of 12 full-time software engineers.
Our mission at Profit is simple: to make small businesses more profitable. The problem we're addressing is that 70% of small businesses fail. One of the major reasons is they struggle to manage their finances. They find it complicated, time-consuming, and also costly. So to solve that problem, we've taken banking, accounting software, and bookkeeping service, combined it all together into what we call Profit. It took us 2.5 years to build it, about 12 full-time software engineers, and about 10,524 cups of coffee. The benefits is super convenient, it saves time, and it saves money. In order to accomplish this, we partner with Evolve Bank and Trust. They provide us the FDIC-insured bank accounts, and we pass over MasterCard, which provides us our debit cards. Our institutional investors are at the bottom of the slide. Here is our dashboard. So what you're looking at is a client that has 2 checking accounts with us. Underneath it is a spend chart that compares their this month's spend versus last month's. And if you look at where the pointer is, it's pointing to our financials tab. When they click on that, there's where you see a profit and loss, a balance sheet, and a cash flow statement built and managed by profit. Another thing that we do is we benchmark our clients. We take their profitability and we compare it against their industry's average to see if the client is doing good or not, and they can adjust as needed. And now here's a video from one of our clients.
My name is Teresa McFall. I own MyVu Plumbing and Construction. We do plumbing. I'm a master plumber, a licensed realtor, and a builder. Everything gets jumbled when you're running in the day-to-day, you know, and you're on the grind and you're out on these streets trying to like get money. It's hard to keep everything accounted for with the bookkeeping and job costing. And sometimes as a small business, you don't have money for an accountant or a bookkeeper. Profit basically is this baby accountant bookkeeper built into your bank account. You can tag different jobs, you can tag different memos. Everything gets put into these categories and spits you out financials automatically. You got your contractors or your techs going out, they're calling you for payment, they're standing in a line, they don't have their own cards. You know, this is just so easy to unlock and lock a card, assign and unassign a card. And once a person has a card, you can move money, they can text to receive money, hey, I need $50 for drywall. We get the text, we say yes or no, money gets moved automatically. Shaves off so much time, so convenient, and then of course, it's tracking individually what every person is spending.
So being that our product is free, you're probably wondering how do we make money? So the first way is through interchange. When our client uses our Profit debit card at a store, the store pays MasterCard a processing fee, and then MasterCard pays us. The second is through subscriptions. We actually give 2 free employee cards, but any cards above that is $5 per month. And then we also offer a premium bookkeeping service for clients that want a more hands-on approach to their bookkeeping. We have invoices coming in a couple of months, and we're very excited about our 2023 product, which is white labeling our financials tab powered by Profit.
And our plan to get to millions of SMBs fast is through white labeling our accounting technology that uses AI and machine learning to build out millions of reconciliation rules. We plan to white label that to banks and credit unions so that way they can use the financials tab powered by Profit to millions of their SMB clients.
Now, in the meantime, our plan is to get to 2,000 small businesses, and this is how we're going to do it.
So partnerships are the key to growing really, really fast. So far, we have 2 strategic partners, SignaPay, who has 30,000 SMBs on our platform, Town Square Media, who has 27,000 SMBs. We also plan to work with minority business organizations. They certify about 50,000 SMBs per year. So far, we're working with 2 of them.
Now, we launched beta in September, and since then, we've done over 4,000 financial transactions. Our clients have spent over $1.3 million using our Profit debit card, and we've generated $26,000 in revenue with just 5 beta clients. Our goal now is to get to 2,000 clients by the end of this year, which will yield us about $500,000 in revenue per month. We're currently raising a $1.3 million seed round. We're lucky that we already raised $1.1 million of that, so we have $200,000 remaining to close that round. We're using the funds for technology and security, hire more team members. The rest will go towards sales, marketing, and general expenses. Our 4-month targets are to onboard 300 business clients, $50,000 in monthly recurring revenue, and that'll get us to our $3 million seed round, which we're opening up in September. Thank you for your time, everyone.
Great job. Thank you. Great job. All right. Great job to all of the presenters so far. We have 3 more companies to go. So the next person that I would like you all to help me welcome to the stage is Elizabeth Lawton, who is the former Chief Control Executive of Wells Fargo. So give it up for Elizabeth.
Thank you, Jasmine. So I'm really excited to be here and to introduce Panos Kliamas with Spin Analytics. Any of you that are in or have been in the financial services industry knows how important credit risk and understanding what your credit risk means. Whether it's for the customer, making sure that you don't offer them a loan that they can't pay back, senior executives that need to understand what their credit risk is for the balance sheet, income statement, shareholders want to make sure that they're getting a good return on their investments. And then obviously there's the regulatory component, especially for the large banks, making sure that you're managing your capital and everything else. So with that, I've been so excited to work with Panos for the past couple of months. Spin Analytics has developed an automation to the processes for modeling, credit modeling, from the beginning of cleansing the data to the database integration to the modeling development itself. Then you get to the stages where you have documentation, and I don't know anyone who's been in modeling here, but I mean, documentation can be thousands of pages, and it just automates that like you would not believe, which is all required for internal validation as well as regulatory validation. It does all this through developing a uniform platform for your code, for the data, for decisions making that is, can be replicated for any models that are built. So very exciting, and being that I was head of capital for Wells Fargo, I looked at this, I'm like, oh my gosh, I need to partner with you. How can I help out? And being the mentor, being responsible at one point for developing loan loss modeling back in, I hate to even date myself, the 80s. It's so critical just to the foundation of a bank. So what he has and is offering is just going to be a game changer in the entire industry. So with that, I would love to welcome Panos to the stage. If everyone can stand. All right, thank you.
So, thank you very much, ladies and gentlemen. My name is Panos, and I'm the CEO of Spin Analytics. Spin Analytics brings a new paradigm in credit risk modeling. And let me tell you that this week is important because we are watching part 2 of the Big Short, actually, which is happening on all the markets. The problem starts from the estimation of defaults in everything, especially in credit risk modeling and loan books. So actually, the problem is bigger because we're talking about banks and regulations. And the banks today, they still work with the same tools, which I would like to name it, just to be sure that you know them. So they use SAS, Python, R, and Excel still in the market. But they don't use these as automation tools. They use them as tools with their teams. This means they must have the experts, that they are going to use the tools, and if they can develop the models. These models are taking significant time, more than 6 months, average 12 months plus. Each model costs between $300,000 to $1.5 million. Average cost. It can cost £6 million or $6 million, depends the jurisdiction. And everything has to do with data and analyzing data, together with global regulations like Basel III, IFRS 9, and CCL for the US market. So we are here to present you actually an automation in everything in credit risk modeling and management, which we call Risk Robot. Risk Robot completely automates the manual process of developing and validating regulatory banking models. It reduced the time more than 90%. It goes from months to hours, and it works globally. At the same time, this is just a start because we can expand the roadmap to other areas of risk management like fraud risk, for example. Risk Robot can be described like a robotic factory. We give to the teams the process to automate their current job. They don't change what they do, but they go from abacus level to calculator. and there is a big difference in the speed and results. They can configure per portfolio risk robot, and they can work on assembly lines, as we call it, because this means they can do what they do today, but very fast and efficient. Risk robot industrializes credit risk modeling for banks, and it takes out all the boring stuff. So actually, they can apply what they need more, which is the expert judgment, as we call it. Let me show you how risk robot works. First, we connect an ETL, a link between the raw data sources directly with risk robot, which can be on-prem or in the cloud that the bank approves. Raw data means they don't need pre-cleansing. They don't need to do this daily boring job, which takes months until they have an idea about what data they have in their database. Then the modeling team will develop or validate the model on risk robot. They don't need code. It's a no-code platform, which accelerates the process even faster. They can override everything. This means we allow them to use the platform as they wish. This is not a black box engine. This follows the regulations and auditors, and actually it is tested globally. And the last part is that it will develop automatically the regulatory part, how the model was developed actually. So this brings significant explainability, transparency, and auditability in the market, and it is what the regulators require. There are direct business benefits in all the teams and stakeholders. We plan to augment the team that the bank is using with risk robot, and they can develop unlimited number of models for any kind of project like model development, model validation, stress testing, capital adequacy reporting, and so on. We have tested risk robot globally in 3 continents, and we have a consistency in the speed and quality of the projects and the models that we developed. We have passed regulatory authorization with big regulators like European Central Bank and Monetary Authority of Singapore, and we are bringing this in the US market. This is a tool that actually can be used for all the kinds of models in wholesale and retail portfolios to develop models for credit cards, buy now, pay later, or any other prediction for the loan book. It's a SaaS pricing platform. We can support unlimited number of languages and can work in the cloud or on-premise. We have global partnerships, and one of the major ones is with the Microsoft team. Microsoft is presenting risk robot as the main solution and application for regulatory credit risk modeling in all the markets globally. This has started the last 2 years, but the last 6 months has expanded a lot. And all the Microsoft teams, which are a lot actually, they are supporting us significantly. They have written a lot of reports, and you can see this online. We are also a transactable offer in the Azure marketplace. We have a sales channel with the biggest system integrators. We have the 6 of the top 6 in the market, and they are supporting our implementation stage, and that's why we feel comfortable to go in any market globally. Our team comes from the banking industry. They were all working in the global banks. They were managing big quant teams. And Mark, who is our US market leader, he is here today. You can talk with him later. I come from investment banking and Fintech, and we have a board of advisors that are some of the most experienced bankers. The current chief risk officer of HSBC Singapore is on our board of advisors, and we're expanding this even more. We have testimonials from the clients that we already validated the product, and these are some of the biggest tier 1 banks, and we'd like to meet more banks here in the US. And we have started already actions with some of the biggest players, and especially in Charlotte area. We are here because we are scaling the US team. We are going to deliver a lot of projects in the next months, and we have created 2 unicorn-level partnerships because 2 of the biggest software vendors have partnered already with us. They have more than 2,500 banks, community banks and tier 1 banks, and we're going to support them as their modeling arm. So we can sell directly license or model as a software as a service. We are here to talk with you to see how we can expand our team. We need new members in the team. We need actually to support the clients. And this is a truly unique opportunity because we don't have direct competition on technology. The competition is manual. We're talking about the Big 4 and other similar management consulting companies, but they are actually starting cooperating with us. So this means that we can become the tool of daily use for all the teams, internal in the banks and outside of the banks. Thank you very much. This is Risk Robot.
All right, thank you, Panos, for a great presentation. So next up, I would like to call Jordan Teal to the stage. He is the CEO of Everly Life. So please help me welcome Jordan to the stage. Absolutely.
Thank you very much. I wanted to do just a really quick PSA. I've had the luxury of working with RevTech for the last couple of years. I made a comment from this very stage, sitting roughly here yesterday, that our industry is typically a very slow innovator. It's the work of people like Dan and his team at RevTech, the founders here today, previous classes, future classes, that truly gives me hope that we will not only catch up, but maybe lead some of the innovation within our industry and then other industries as well. I've had the luxury of being on a couple of the advisory boards, and one that I want to talk about today is White Swan. They realize that the innovation in the insurance space, particularly the life insurance space, is typically the very last to see innovation. And the innovation we have seen has typically been in the term space. And instead, they wanted to not stay on the periphery, but instead dive into the core of most insurance sold, life insurance sold, which is permanent insurance. So they started to realize that permanent insurance has been bought and sold the same way for over 100 years, while everything from banking, stock trading, and just about every other type of insurance has seen innovation and gone online. Life insurance, and specifically cash value life insurance, is still sold by the quintessential briefcase salesperson walking up to your house or meeting in an office. And I think we all know that's just not going to work for our new generation of buyers. So through online exposure, education, and experience, White Swan is helping reach a previously overlooked demographic that can benefit from cash value life insurance, and provides the buying experience that anyone who has become a digital-first consumer both expects and demands. So please help me welcome Paul Simmons from White Swan.
All right, thanks so much. Hey everyone, how's everyone doing so far? Excellent, all right. So as Jordan said, we are addressing what I see to be a big issue. I come from one of those Fortune 100s that we have like 17 or 18 different legacy systems that try to talk to each other. And that's the behind the scenes. Forget about sitting across that dining room table from an agent. A few stats though on the industry. In 2018, almost 30%, 28% of millennials said they would buy life insurance online, leaning towards wanting to buy life insurance online. Today, just 5 years later, 29% of all consumers consider doing the same thing. So that's grown, that's good, right? 80% of all potential life insurance owners, all consumers, say, hey, life insurance could be a really big part. It's important to have as part of our financial plan. Yet almost 1 out of every 2 Americans doesn't even have life insurance coverage at all. That number, by the way, has gone up. It was 3% lower. It was only 43% just 3 or 4 years ago. Now, to me, that's inherent of a bigger problem. Referencing what Jordan said, life insurance has always been sold, not bought. 7 o'clock Friday at the dining room table, whatever the guy's got in his briefcase, that's what you're getting. Whether it's a square peg, round hole, square peg, square hole, whatever it is, right? But for the digital generation, what's online exists. What's not online doesn't really exist. So that gives us this conundrum. The industry's kind of failed the digital generation and the digital consumer, in my opinion. We haven't provided the digital buying experience for permanent life insurance until now. And that's what White Swan's doing with distribution online. We do it again through the 3 E's: exposure, education, and digital experience. Looking at the competitor grid, I don't even call it a competitor grid anymore, but look at the 2 lower vertices. These 2 lower vertices are traditional life insurance, both term and perm, being bought and sold along the tables that you're all sitting at right now. In the term space, there's been some success. We do see some, not market saturation, but we've got the policy geniuses out there, the ladders that are doing really well with term insurance. You'll notice wide open where we are at White Swan is permanent life insurance. And people come to me and say, hey, you know what, there's a reason for that, Paul. Isn't it too just complex to buy online? There's too many moving parts, there's too many things you can't assess. And I'd argue and say, you know what, the same thing was said just a few short years ago with Robinhood, Banking, Chime, Betterment, Lemonade, and Policy Genius most recently. And now here we are at White Swan. We do this through a couple of things. Number one is education, empowering the consumer or prospect, as we call them, with education. Let them learn, let them grow. And then we use Alice. Alice is our automated life insurance concierge, thinking her as a carrier and product agnostic agent that has the download of the 50+ years insurance experience that our team has at White Swan, all downloaded into her. to help you find the right solution for yourself. On the education front, we've got blogs, we've got articles, we've got links, we've got even educational memes. We've even got a best-selling book that was written by our founder. When we jump into Alice, we've got a needs analysis. It's thorough, but it's pointed. It's only 9 questions. And it helps you assess your needs, understand what those needs actually mean, and your appetite for risk in different areas and metrics of an insurance policy. It works through our recommendation engine, and it outputs a customized plan for you. And what you see here is the name of a carrier, specifications of an illustration, and a visual, an interactive visual that you can manipulate to better understand what's happening in that illustration, as well as some verbiage as to what's going on. Said another way, if anyone in this room's ever seen a life insurance illustration for like an IUL, 40 to 50 pages, we've condensed that and extracted the core metrics necessary to help a person make an educated decision on what's right for them. Hey, still not sure an IUL is right for you for Nationwide? Good product, but let's compare it. And it doesn't have to be to another IUL. Let's look at whole life. 2 very different animals for those of you that know permanent life insurance, but we'll give you the differences. We'll help you contrast them and move through them. The buying experience is your choice. Hey, you want to set up a call with one of our advisors that has 30+ years experience? Cool, do it the old-fashioned way via a virtual table on Zoom. You want to work through Alice online and then move over and maybe call someone halfway through the process? All right, do it. Or what we're building out through Alice is the ability to take this, seize it in your own hands, and make that decision. We're empowering you. So we're flipping that old adage on its head. Instead of life insurance being sold, now life insurance can be bought. Quick genesis of our company. 2021, we got taken care of our licensing, our appointments with carriers, developed our platform, expanded our team. We really spent a lot of attention and detail to bringing a product to market through Alice that's going to be a meaningful experience. Q1 of 2022, worked on our QC as well, developed a marketing campaign, and then Q2, we put our money where our mouth is. We started spending money generating revenue. We're going to put a pin in that for a second. I'll come back to it. But by the end of Q3 this year, we're looking to close our seed round, make a big API-driven tech enhancement to Alice, which is going to increase her capabilities 100-fold. And then at the end of 2023, we're hoping to have that in place and completed, or I should say by mid-2023, which is going to cause us to scale not only our processes, but also our personnel. Going back to revenue, we spent about $3,000 in April. Digitally, that enhanced us $27,000 in revenue in May. Tweaked things, went up to $4,000 in May. We're anticipating $50,000 in revenue in June. 2-pronged marketing approach. One is those ready-to-buy clients. Let's get out there. Those people who know what they want, we're going to get in front of them. And we're going to make sure that we're one of those relevant search results. Market expansion, we're working through digital advertising, native advertising, and emails. And the carriers and products we're working with, IUL, Whole Life, and GUL right now, we're adding private placement, which through our RIA channel has been a tremendous, we're hearing a lot of resonating success through that, as well as VUL and linked benefits. The team that's here today is myself, I'm the head of product and the digital platform, as well as Todd Hawk, our COO. Please come see us. We're looking for $1.4 million in a seed round to really undertake that tech project and enhancement. And we'd love to talk to you and help disrupt this industry together. So thank you for your time, and I'll turn it back over to Jasmine.
All right, y'all, we have finally reached the end of demo day. Just kidding, we have one more company. So the next person that I would like to call to stage is Paris Smallwood, who is the senior consultant of SCI. So Paris, please join me on stage.
Hello, everyone. I'm Paris Smallwood, and I was hoping for a Highway to the Danger Zone with Top Gun out, but unfortunately that didn't play out. Really quickly, I know we're the last one, so I did want to say thank you to Jasmine, Ashley, Dan, and the whole RevTech Labs organization. I mean, it's been a true privilege to be able to advise a company so promising and young as Wingdriver, and I hope to continue it in the next cohorts. So Wingdriver works to support companies to improve their driver safety by offering them some really computer vision and AI in something that's been designed for smartphones. They try to help them avoid accidents, which is obviously something that is relevant to all of us. I actually have a version of Wingdriver's application on my own smartphone. And yes, it does work on an iPhone 7 that has the old button, but it'll work on yours too, I'm sure. Wingdriver really, with the value that it offers to drivers, to automotive insurers, as well as to fleet managers themselves, with all those values that they add, there's really something that a lot of people can buy into here. Because of that, I'm really excited to welcome to the stage the co-founder and CEO of Wingdriver, Andre Azevedo.
Super cool. Thank you very much. So, okay, now I'm on. So, first of all, thank you very much to all of you. Thank you, Paris, and good morning. This video should play, but it's not playing. So, what happened is that that guy fell asleep. It was a Uber driver. They have a crash, but luckily, both of them survived. But in US alone, more than 5,000 people die every year due to sleepiness at the wheel. There must be a solution for this. I'm Andre Azevedo, CEO and co-founder of Wingdriver, and we have the solution for this. A mobile app to assist drivers with real-time alerts designed for all vehicles and ready for all drivers. Wingdriver assists drivers avoiding accidents with next-level computer vision and AI designed for a smartphone. So, as you can see on the left, we use your smartphone, your selfie camera to monitor your face and understand what is happening with you. Unfortunately, for sure, next video will not work, but here is an explanation, or it could be an explanation of us alerting in real time when you are distracted to focus you again on driving task, or alerting you when you fall asleep to wake you up. So different types of alerts, visual and audible alerts. And our technology has many different areas, but the main one is the driver assist computer vision, where we use your facial analysis to understand your sleep, your fatigue levels, distraction, actions detection, stress, emotions, the impairment detection, etc., etc., etc. And this technology generates a lot of benefits, but these are the main ones. We increase the vehicle uptime because you have less crashes in your fleet. We reduce your operational costs because your fleet is less risky. We prevent collisions with real-time alerts, and we improve driver behavior because we are collecting new sources of data for you to improve them. And with that data, insurance can innovate in their risk assessment. And how we are doing this? The first thing is our software development kit. We allow everyone that has a mobile app to add our driver assistive features to improve their drivers and their driving. And on the left side, we started by building our app. Why? We build our app to collect data, to test algorithms, to give to our clients the possibility to make some pilots and to learn a lot about our customers. And on the other side, Wingdriver Cloud is where we collect all the data and we use that to improve our AI and to sell in the future for example, risk assessment as we are talking about. Regarding our business model, super simple, licensing fees. That varies accordingly to the product that you are using and the amount of users that you have. So super clear and super easy. And now that you know about our product, our business model, let's learn about our highly leveraged go-to-market strategy. We are targeting 3 market verticals. Digital mobility companies, so we want for them to improve their apps and reach consumer and professional drivers. We are helping fleet management companies to have a new product to improve the safety of professional drivers, and insurance companies, of course, to reduce the risk of their insurers and to better calculate the risk on the overall. Of course, we are not alone on the market. We have 2 types of competitors: indirect, tier 1, tier 2 suppliers. They develop solutions, hardware and software for new vehicles, BMWs, Fords, GMs, etc. And our direct competitors. our aftermarket driver monitoring solution companies. They have a specific hardware, a specific camera that needs to be installed in a specific place on the vehicle, and it's boring, and they are not growing so fast because they need to sell software, they'll sell hardware to save our roads. But until now, none of these competitors has offered a smartphone solution as we are. So we generate a lot of competitive advantages. We are the first to market with our driver assist app. We don't have any hardware, so our product is super easy to scale. We respect privacy, we are GDPR compliant, and we give the user the full control. They can opt in for a different type of privacy modes. And we are in the big data play. We want to collect tons of data for a faster and better accuracy over the AI. And we are affordable, super affordable actually, because it works on your smartphone, as Paris is saying. It works in every smartphone. And for the future, we are proof. Future autonomous vehicles, we'll pass from monitoring the driver to monitoring the passenger. And we are super proud of developing this. Our team is amazing. Me and Philippe, we have a successful exit in the market with a healthy road. So since 2014, we were trying to solve this problem. We start by developing an hardware and a software solution for new vehicles. But Wingdriver has a better and bigger possibility. Our CTO, Rui Monteiro, worked 3 years in Bosch Innovation, developing AI to monitor the passengers inside of the vehicle. And our advisory team, a lot of complementary know-how. Tom Dingus, for example, world-renowned driver monitoring researcher from Virginia Tech Transportation Institute, it's in our board and is our investor. And then people from navigation industry, automotive industry, and mobile. Regarding the market, you are targeting big, $7 billion a year, the total market. But we are only targeting Europe and the US because new mandates are coming in order to enforce the introduction of driver monitoring solutions in new vehicles. So that is super cool. For us, we are targeting $6.5 billion a year in trucks and cars. And regarding our traction, we started in April 2021. In March, we entered in RevTech Labs. Now we have 10 companies testing our technology, and we are looking for a pre-seed round that will lead us until December, our seed round. And regarding our pre-seed, we are looking for $800K using safes to grow our team to 12 members, have all driver-assisted features developed, have 6 SDK clients and 315,000 drivers. This is our objectives for the pre-seed round. And imagine, in our first year, we have 10 global companies testing our product. Thank you very much.
Great job. Thank you. All right, y'all, so we have finally reached the end of demo day. Can we just have one more round of applause for all of our presenters today? You all did so great. I am proud of each and every one of the founders that presented today. So great job, everyone. So next up, another big component of my job is not only getting to work with the amazing founders, but I also get to work with a bunch of individuals that volunteer their time back to our programs through their mentorship. So I would just quickly like to thank all of our mentors. If you're a mentor or if you have mentored for the cohort, can you please just raise your hand? Can we give these people a round of applause? As I said, y'all, the mentors, they volunteer their time back to our cohort. So we are just really grateful for all of the folks that continue to support our founders throughout the program. Also, if you are interested in working with entrepreneurs and just mentoring throughout the Accelerator program, please visit our website. We do have a mentor application that you are more than happy to fill out. And then we always welcome our mentors on an ongoing basis. So if you are interested in mentoring for the next class, please visit our website. So to continue on with the mentors and showing our appreciation, we always like to highlight 2 of the outstanding mentors that are in the cohort. So these are just some of our previous award winners that have just gone above and beyond for our founders. So I am about to announce the 2 mentors that just went above and beyond for our cohort. But we will have Elizabeth Lawton. If you can join me on stage, she was one of last year's recipient for the Outstanding Mentor Award, so she is going to help me welcome our first winner. All right, Miss Nikita Norman, if you will join us on stage for the Outstanding Mentor. Mike, please, thank you. There you go.
Thank you so much for this fantastic award. I wasn't expecting to actually get something to put on a mantle or something. So this is fantastic. I had the opportunity to meet Dan and his lovely wife about 10 years ago, Sarah, and it has just been a phenomenal, phenomenal ride. 5 years ago, I became really active in QC Fintech. I've seen them just grow tremendously, and it's probably one of the best parts of my day, to be able to interact with the companies, to help them in any way that I can, and make strategic introductions. So certainly, as Jasmine has already mentioned, please, 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 if you are not a mentor, please sign up to be a mentor, become actively engaged, because these companies need you, our industries need you, and so forth. So again, thank you so much.
Thank you. Thank you, Nikita. So the next person I want to join me on stage is Jordan Teal. He was also a recipient of last class's Outstanding Mentor Award. So he's going to help me welcome our next winner for the Outstanding Mentor Award. All right, Paris Smallwood, if you will join me on stage.
So I'll be brief since you guys just listened to me. Honestly, I was also not expecting something heavy, so now I have to, but really, I really appreciate it. I actually recently moved back to North Carolina in January of this year, back home. We can talk later about whether I'm a UNC or Duke fan. It's complicated, but really, RevTech and this program has given me an opportunity to kind of dive back into the community that I'd almost forgotten, I left when I moved down to Atlanta in the early 2010s. And since being back to coming here to open SCI's 13th office in Charlotte, it's really been great to have this community as something to jump back into. And Andrea, an amazing founder, it's been great to form kind of a partnership and a friendship with you. And I really look forward to hopefully doing this again and staying in touch with all of the folks in the cohort from this class, because I see a bright future ahead for all of them. So thank you again.
Alrighty, so I think this is my time to finally introduce Dan back onto stage so he can close us out.
So Jasmine, you don't get to leave the stage quite yet, so you need to stay up here with me. First of all, thank you to all of you. I thought the companies did a wonderful job. Can we give them one more round of applause, please, for the companies? And for the founders, everyone on the founding team, we're going to do a photo right after we break, so don't leave the room for lunch with everyone else. We need everyone on stage for a photo, right? Y'all got that? Jasmine mentioned that this is her last demo day with us. She's taken a fantastic opportunity in New York City with Empire Startups, and John and his team, and we're thrilled for that. I know getting to New York has been one of your lifelong dreams, and so we're very proud and very happy that you're able to do that. And I think it would be remiss if we didn't stop and recognize and thank you for the 4 years of your life that you put into RevTech Labs and building a lot of what we've seen. And you've heard people say really nice things about RevTech Labs, so thank you. But it's really the team that deserves that. Jasmine's been a huge part of that with our mentors and with our company. So can we give her a standing ovation, please, to send her off to New York City? Thank you, Jasmine.
Thank you. Thank you.
And no, not yet, not yet. And so, of course, the RevTech Labs team was not going to let her go without a little good-spirited roasting. So the team has apparently put together a video that I have actually not seen. And there's some mixed feelings on the team about Jasmine leaving. You know, should we be nice? Should we mean? So I've not actually seen this video, so this could be really, really interesting for her to watch live. So if we could play the video, please. Let's cue this up.
Another turning point, a fork stuck in the road. Time grabs you by the wrist, directs you where to go. So make the best of this test and don't ask why. It's not a question but a lesson learned in time. It's something unpredictable, but in the end is right. I hope you had the time of your life. So take the photographs and still frames in your mind, hanging on a shelf in good health and good time. Tattoos and memories and dead skin on trial. For what it's worth, it was worth all the while. It's something unpredictable, but in the end is right. I hope you had the time of your life.
Round of applause for Jasmine. Ashley, thank you for making that video. I think that was fantastic. Do you have any parting words, Jasmine? I know how much you love public speaking.
I don't. I have no parting. Well, I'll say this. So I started RevTech Labs when I was still in college, when I was 18. So the growth that I've made at this company has been tremendous. The connections that I've made have been amazing. Professional, personal development. You know, I'm like almost too stunned to speak. But yeah, it has been just really rewarding to be able to work with my amazing team. And Dan Roselli, he really gave me an opportunity, just a small town girl from the country, and he gave me an opportunity to live out my city dreams. So I'm very, very grateful. I love Charlotte. I owe this city everything. It's been an amazing 4 years, but I am so excited to get down to New York. So thank you, everyone.
Well, thank you, Jasmine. As we say, it's not goodbye, but we wish you goodbye for now, because we will see you at Empire Startups when we go there, so you won't be able to escape us and get away from us that easily. But appreciate everything that you've done over the time that you've been here. It's just great. And it's one of the things that makes my job really fun, not only working with the founders, but working with a great team of people. It's just a lot of fun to do on a day-to-day basis. So. All right, a couple of housekeeping things now. So founders, as soon as we break, if anyone who's with one of the founding companies, come up on stage, please, so we can get a nice photo of you in the class. We're about to break for lunch. You can reach all the founders. Most of them have booths outside in the expo floor, or you can reach them via Brella. So if you want to do follow-ups, if you can help them on some of the asks that they just made, that would be fantastic. And Brella is a fantastic way to do that. And then we have two things coming up at 1 o'clock. On this stage, we have Vinu Vijay from Truist, and then over on the other stage, we have Brock from Lendio. So great stuff happening at 1. Full afternoon of great, great stuff, so don't skip out us on the afternoon. I know that's always tempting to do at a conference, but we have some great folks, and then wrapping up with our happy hour around 4 o'clock today. So with that, we'll break for lunch. You can get your food, and you can come back in here and lead these tables. So looking forward to the afternoon. Thanks, everyone. Great demo day.